First of all, I don't think I said there was a green bubble yet. The question that I was asked was, is there a green bubble possible, and if it happens, could it be bigger or worse or less worse than the tech bubble? And what I said was, I think it could be bigger, and the reason it could be bigger is because the total available market for the companies that are involved in green tech is just so huge. In tech, it was a speculative bubble, and it was speculative because most of the markets and industries that were being developed de novo. Here, you're talking about cannibalizing existing trillion-dollar industries, whether it's electric utilities, oil and gas, whatever. That is a massive sea change. And so people could get incredibly enthusiastic about how large the market could be and let valuations get out of control. What can people do to prepare for it? It's hard to know. I mean, you can't prevent silly people from making silly purchase decisions. There's only so much you can do to protect people from themselves. But I think as long as the companies are focused on fundamentals, they're going to be fine. What went crazy in the internet bubble was when people started talking about valuing companies by very non-traditional metrics. And those non-traditional metrics are really what got us into trouble.
One other thing, it may have been you or someone else who talked about the fact that there's no semiconductor, there's no sort of Moore's Law driving the value proposition. It's got to be more a broad economic thing. Does that change what the valuation bubble, how big it might inflate?
Well, I'm not so sure. I mean, the point I was trying to make there is that so much of what goes on in green technology today is, well, we've got to change people's behaviors, or we've got to get governments to subsidize. And what I was trying to say was, look, it's really quite simple. People make decisions that are economic decisions. Everyone has always made an economic decision. And the reason the internet is going as crazy as it is right now is because people are making fundamental economic decisions. And if clean tech is going to really take off, it's going to have to also provide very simple ROI, very simple cash-on-cash return, and incredible cost-benefit economic. And what is missing in clean tech right now that the technology industry has had is Moore's Law, or the transistor, or the microprocessor, something that allows people to get quantum levels of increased price performance for the same economic dollar. And when you talk about switching costs, which is fundamental to any new industry, switching costs. When you talk about switching costs in tech, you're talking about order of magnitude changes. I'm 10 times better. You have to buy me for the same price. Nothing in clean tech is 10 times better for the same price. It's 10% better. It's 20% cheaper. It's only 30% more expensive to deliver the same thing. So that is a real difference, and that is, in my opinion, the gating factor for dramatic redeployment of alternate energy and other technologies within green tech.